Let's start with a broad view here. You have this conference, a three-day conference here in Boston. What is the TMT space morphing into or coalescing around? It certainly has changed here in the last year or so.
It's been a really dynamic and exciting time in our industry, and I run the global media and communications practice, where I think the volatility and the action for the last 6 months has probably been as high as I've ever seen it. and there are a number of reasons for that. I mean, if you go back and look at the way our industry grew up for the last 25 years, you had industries that were defined as wireless or cable or fiber or satellite, and we thought of those as separate and discrete industries. And what everybody realized about 2 years ago is that we're no longer in the wireless business or the voice communication business or the cable video business. Everyone's in the consumer broadband business today, and different people bring different strengths and different weaknesses to what is a much larger industry canvas. And so what we're seeing now is the industry trying to sort of take the final step of providing a broader range of services across multiple different platforms and mediums for consumers to both communicate, be mobile, and to watch video and be entertained. And it's not quite clear how all this is going to work out at the final table, but it's exciting to watch, and it's created a lot of event-driven trading volatility in our industry.
What's your outlook for deal making this year? It's been slow. There's been some trepidation. Obviously, there have been regulatory concerns about the political environment. Are you optimistic about the year ahead?
You know, I think there's going to be a lot of focus and activity, a lot of volatility, and a lot of speculation. I think that the challenge that we have, the auction rules in many of the companies that are sort of left as winners in this industry were precluded from having any discussion with each other for almost a year because of the last spectrum auction. Those rules came off 3 weeks ago, and I think investors were thinking that there was going to be this flood of immediate activity. But the reality is people who might be interested to think about deals haven't even had a chance to really communicate with each other in any meaningful fashion for almost a year. And I think one of the things that's driven some of the recent volatility in the marketplace is the realization by investors that, you know, this all may not be happening right now. It may not be happening at all. When it does happen, it may look different than what I thought. And now that there's actually the possibility that I could wake up on Monday morning and read about something, you know, I'm thinking about it a little bit differently than I was. And I think this is going to continue really through the rest of the year. When you think about where the industry is today, I talked about winners in different segments, right? And if you count them up, which you can do, right, it's 15 or 16 companies that are going to define the future of broadband communications in the United States. You've got the wireless companies, the cable companies, the internet media companies, and all of these companies are run by people who are fabulously successful entrepreneurs, and many of them are controlled by control shareholders. In fact, of the 16 companies I referred to, 10 have either a control shareholder or a CEO founder. And, you know, when you think about deal making and why it's so complicated now, you know, if you can tell me which of these fabulously successful CEOs and leaders and shareholders will find alignment and commonality with each other and think about taking the industry in a different direction, because whatever the next big deal is will fundamentally change the trajectory of the industry. You know, I can't model that. My analysts can't do the math on that, right? And then what the regulatory environment would conclude about all that.
Do you have more clarity about that at this point? You have Ajit Pai now as the head of the FCC. Do you know where things are headed regulatorily, and do you think that's going to accelerate maybe the pace of deal making?
You know, I think the word coming out of the FCC, I think, is very positive for my sector, because, you know, in the past, I think people who have deployed capital to create broadband pipes haven't always been able to earn the sort of return on that and manage their networks the way they wanted to, because the political environment has been very intense around net neutrality and everything else. I actually think the direction that the FCC is going is positive for everybody. An open and free internet and more investment in creating different alternative channels, I think, is a good thing. I think the regulatory environment that's harder to predict is at the Department of Justice. You know, who is ultimately going to be opining on transactions in the future? And, you know, my industry is not new to have big transactions with regulatory challenges, whether it was the old AT&T deal, AT&T's attempted acquisition of T-Mo a couple years ago, even Charter's attempt to buy Time Warner Cable, you know, all ran into regulatory challenges. So when you're thinking about, you know, the consequences of trying to do a deal, and the smallest company of the 16 I mentioned is $50 billion. So these are career decisions. There's no do-overs. This is, you know, make or break, and you could get hung up for 12 or 15 months before you know whether you have a deal or not. And all of these people have important businesses to run too. So I think those are important considerations for people when they think about whether they want to push ahead with something.
We saw this coming together of Comcast and of Charter and Comcast. Do you call that a deal? How do you characterize the relationship that they have as they push forward, trying to get to that quad play that you mentioned a few moments ago?
You know, it's it's risky to speculate, but I think what they did, makes sense for them. They're in the same sort of dynamic environment, trying to figure out, where the world is going to be that everyone else is. They have great businesses and powerful franchises to bring to this evolving ecosystem. And I think by agreeing to operate somewhat in concert, they exert a little bit more control over how deal making might work out, what's in whose interests, and creates a little bit of alignment around, the two leading cable players, whether it's around wireless or MVNO negotiations for wireless services. And it probably is intended to slow down some of the view of rush and activity until they can, be more rational, thoughtful, and maybe control the dynamic.
Yeah. Lastly, is it a replicatable model? Do you think that other companies will pursue kind of a similar arrangement?
That's hard to say. I don't think the wireless companies can, because they all have national franchises. Right, and there's been a lot of speculation about whether 4 wireless carriers could go to 3 wireless carriers, or whether the introduction of Amazon or Dish or MVNO agreements with the cable companies represent sufficient increases in competition to allow. This is all endlessly speculated about, but I don't think we're going to see agreements like the Comcast Charter deal and other sectors, because I think it's unique to a local cable franchise. Yeah. If there were a 100 million household cable franchise, we'd have a quad play player in the United States. The reason that we don't have a quad play player in the United States is because it's so challenging from a regulatory perspective to put together a wired terrestrial broadband solution that covers half of the country. It's been blocked every time it's been tried, and which makes it really hard to acquire a national wireless carrier, the entry price for which is $60 to $70 billion. And just because quad play works very well in Europe and Caribbean islands, and would work very well, I think, in the United States, doesn't mean that we can rapidly get to a place where we have 3 competing quad play service providers.